Hey, this is Nick from Income Digs, and welcome back to our full end-to-end free course on accounting and bookkeeping within QuickBooks for real estate investors. So whether you're an investor yourself or you're a bookkeeper who is taking advantage of this really lucrative niche, you're going to want to stay tuned for this module as well as the others that we have available. Check out modules 1 through 3. We have links in the description. This is really a preview of our end-to-end course offering, Real Estate Accounting Bootcamp. Definitely check that out as well. But I want to dive into this with you today. We're going to talk module 4, operating your real estate investing business. So this is about the day-to-day. All right, we talked about in the previous modules a lot of setup, okay, a lot of how to purchase property and do those one-off large transactions. What we're talking about today is doing the more day-to-day transactions, right? And this is where I honestly see companies and investors and bookkeepers make or break their business. They either do this right or they don't and suffer the consequences. What we're focused on right now is, hey, we're set up. Now let's run this machine. Let's get this machine working for us so that we can kind of go back to doing what we do best, which is buy real estate, invest in real estate, flip real estate, etc. If you're a bookkeeper, your job is to enable your customers to do just that. All right, so keys to an effective bookkeeping process. There's 3 things I want to focus on with you in this lesson. As I mentioned, we have a lot more in our end-to-end course, but I want to focus on these 3 today. First, understand the bank feed and the QuickBooks balance. Okay, we're going to talk about that and why they're not by default necessarily accurate or in sync. I want to talk about that, make sure we understand how that works. I want you to be comfortable with AR and AP, accounts receivable and accounts payable. 2 really simple features, invoicing and bills. All right, I want to show you how to use those to manage your cash flow and populate your reports. And lastly, we're going to talk about mortgage payments and escrow balances. This is a really specific item here, but I want to talk about it because it's one of the most common questions I get. How do we account for all of this in QuickBooks? All right, so we're going to tackle these 3. I promise you we're going to hit them hard, we're going to hit them quick. Make sure you get as much value as possible. Stick with me. I promise you it will be worth it. Let's talk about the first one here, the bank feed. Okay, so the bank feed is one of those cool features within QuickBooks where we connect to the bank, credit card, whatever, and we have all these transactions flowing through. It's also an area where we can get really hung up. All right, so the QBO balance does not equal the bank balance, at least not automatically. All right, so one thing that I see a lot of entrepreneurs do or bookkeepers do is they get the bank feed connected and we have this mismatch between what QuickBooks says our balance is and what our bank says our balance is. And honestly, that's okay. What I want to go over today is understanding why that happens and being comfortable with it and understanding how we adjust and make sure that everything is accurate in the future. It's all about timing. I'm going to show you that. So understanding the bank feed. The QBO balance does not automatically match your bank balance. QBO helps you to categorize these transactions, but input is always needed, okay, by you or your bookkeeper or a VA, somebody on your team. Use rules to systematize your process. I'm going to show you this relatively quickly, and then when we go to the mortgages, I'm going to show you how you can really use rules to expedite your entire process. And when in doubt, create transactions ahead of time and then match. And this is exactly what I demonstrated in module 2 when we talked about purchasing property. You want to create those journal entries ahead of time and then match. Let's see it in QuickBooks. All right, so our bank feed is right here. And again, bank transactions, that's one of those areas where we got a bank balance and then we have a QuickBooks balance. The first thing I want you to understand is that it is a magical moment when these balances match, but I would say in my business, 80%, 90% of the time, these balances don't match exactly. Now, they shouldn't be as far off as I'm demonstrating here. I'm going to show you a better set of books in a second. But they're almost always not accurate because of timing, okay? So our bank balance is, hey, here's what's happening as far as we know it. And those are all cleared transactions. But what we should be doing in QuickBooks, as I teach, is we make a lot of proactive transactions to kind of get ahead of the game, which is going to create balance adjustments quicker than our bank might necessarily pick up on. So I want us to be understanding of that and comfortable with it. And we need to put some practices in place to make sure things are accurate. Okay, I'm going to go over to a different set of books and just kind of look at this another way here as well. So right here, I've got a Spark card, a credit card, and here's my bank balance, here's my QuickBooks balance, okay? This is very commonly what happens. My bank balance has something, but QuickBooks doesn't have it quite yet, okay? And the reason is because I haven't done anything with these transactions yet. Now, a lot of folks will look at this and say, well, what do you mean you haven't done anything with it? There it is. It says who it is, and it's categorized as software and hosting. That's not true yet. This has not been dealt with, okay? So QuickBooks does a really good job of separating out your bank transactions into 3 categories: for review, categorized, or excluded. Okay, so those items that are in for review, quite naturally, those are the items that we or our team need to deal with in some way, shape, or form. I need to either agree with what QuickBooks is suggesting, do something different, make a little bit of an edit, do something, but I need to deal with this transaction, okay? Once I do deal with it, it moves over to the categorize stage, okay? Now, in the rare case, we could also exclude transactions. I would like to not really exclude too many transactions, right? I'm in a test set of books now, so I'm kind of doing that. But generally speaking, we want our QuickBooks balances and our QuickBooks ledger to match almost exactly, probably exactly, to what our bank has as well. Now, this is a big reason why I am not a proponent of bringing in your personal credit card or your personal bank card into your bank feed. So let's say you own real estate personally and you do some spending on your real estate properties on your personal card. And so you might have a tendency or an instinct to add it to QuickBooks Online. I'm going to ask you not to do that. The big reason is because we'd have to exclude all those other transactions that have nothing to do with real estate, right? Our personal life, our groceries and stuff. We're not going to bring those into our books. And so we're left excluding a bunch of stuff, and we're never going to even come close to having a bank balance match our QuickBooks balance. So don't bring that in. For one, try to get a separate card, try to get a separate credit card or bank card. Or if you're doing some one-off purchases, we can deal with those with some journal entries, no big deal. But we don't want to have too many excluded. Our goal is to get from review to categorized. So let's do that. Simplest way here. I have a transaction that shows up. The date comes through from QuickBooks. I need to either confirm this or do something with this. It's saying that, hey, Microsoft is software and hosting. In this case, it's exactly true. That's my Microsoft 365 subscription. So I'm going to put it there. Now, if we're doing multiple business entities, we absolutely want to have our business indicated there and our class as well, and I can add this. Now, when I add this, my QuickBooks balance will adjust. What I am doing is I'm saying this transaction currently doesn't exist in my set of books yet. Once I add it, it will, okay? That updates my QuickBooks balance. If I do the exact same thing for Tenant Cloud, which happens to be also software and hosting, I'll go ahead and add that. Now I have a matching balance. And that's typically what happens, okay? They mismatch for a little bit, and then as transactions come through, they should generally equal each other, okay? Now, one thing that you can do is you can use a kind of a ledger situation, so you can go to your register and look for any transactions that might not be cleared yet to see what might be an issue, right? So if I go to my filter here and I go reconcile status, no status, that's going to give me everything that hasn't been cleared by a bank yet. And these are typically items that might be a little bit suspect. Maybe there's something I need to work on here as well, okay? So that's a good way to do that. But I think generally speaking, the biggest thing I need you to do is understand that these items might not always match and equal each other. And that's okay for a short period of time, and we just need to then get things to match, okay? Now, another thing that we can do within the bank feed is we could utilize rules, okay? Let me bounce over to the other set of books to talk about rules a little bit more thoroughly here. So here I have all this NYSEG stuff. So NYSEG is a utility provider here. So I could categorize this as electric and indicate the property and the business and all that. I could easily do that. But one thing that we should try to do is when we have recurring transactions or transactions that are really similar, let's take advantage of rules. So if I click create rule here, what we can do is we can say, hey, this is my NYSEG rule. So anytime I have money coming out of this specific checking account, or it could be for everything, doesn't really matter, and it contains the description NYSEG web pay. Now notice here, by the way, I got NYSEG and then I got NYSEG bill down there. So maybe I just make this NYSEG, keep it a little bit more generic. All right, so then I can start thinking about what do I do? What do I want QuickBooks to help me do once we have that? Okay, well, it's an expense, sure. Category, utilities, electric, always. Who did we pay? Well, why don't we put in who the vendor is? Seems self-explanatory, but let's go ahead and do that. I didn't have this vendor yet. Who was it for? This would be if we're using a specific customer or if we're using customer as our property. Now, this is probably not going to be a good idea if I have multiple properties utilizing NYSEG. I'm not going to be able to indicate this automatically. Same thing goes for class, okay? So if I have all of my properties or some of my properties using NYSEG, I'm not going to know when it comes through which one it's for, okay? So I'm going to leave that blank. I'm going to leave business blank as well. And for that reason, That's why I'm not going to auto add, because what I'm going to get from this rule is that QuickBooks is going to help me do some of the work, but I still need to go in, or my bookkeeper, my VA needs to go in and indicate the class in the business. So I'm not going to automatically add. In fact, I almost never auto add, okay? Because what that does is it be in the background without a human being. It's going to create transactions, and oftentimes we get a little confused by that. So I'm going to click the save button on this rule, okay? And then notice what happens here. QuickBooks is suggesting that it's electric because of the rule. Now, I can still override this for whatever reason. If it wasn't for electric, I can override this and make it gas. But in this case, all I need to do, or my VA needs to do, is come in here and indicate what business it is, what class it is, and then we can go ahead and add those transactions. So rules are really, really good for us. And I'm going to show you when we get into mortgage payments how we can really use those to save us a lot of time as well. All right. So bank feed is your friend, but don't think that everything's going to be done for you. You and your team need to come up with a system and a process to utilize this amazing functionality, but to get your books in order, get your bank balance to match QuickBooks Online. Going to our second. So this is AR and AP. Again, accounts receivable, accounts payable. I want you to take advantage of invoices and bills. We're going to understand who owes you and who you owe. Okay, so invoices, somebody owes me money. A bill, I owe somebody else money. We're going to populate the financial reports, that being the P&L and the balance sheet, while managing cash flow, okay, which is really, really exciting. All right, let's see that in QuickBooks Online. So the first case would be invoicing. So if you are a real estate investor, you probably have tenants. Now, if you are managing the collection of rent from your tenants, you should definitely use invoices. Okay, now you might have another system for doing this, and if so, feel free to not necessarily do this in QuickBooks Online, but in lieu of having something else, this is a really good place to come in and say, hey, I've got rent due to me, and it's due for a specific customer, okay? So Juliet is potentially a customer of mine, a tenant of mine, okay? And I require her to pay me for rent for Buffalo Street. And this could just be monthly rent, okay? $850. Let's do an invoice date. Let's do a due date, okay? In class, you can indicate as well, all right? So what this will do is as soon as I issue this invoice, it will recognize the income, right, on accrual-based accounting, and it will say that somebody owes me the money. So now it becomes less of a financial reporting question and more of a collections question, okay? So I'm going to go ahead and say save that, and I'm just going to show you where that shows up in our different reports, okay? And actually, I'm going to change the date on that just to be in 2018, just so I can have it show up on a nice, neat report. So I'm going to do 9/9/2018, and that's when it's due as well. All right, save that. Let's go over to my balance sheet to start. Okay, so there's my balance sheet right here. And what initially happens is accounts receivable, $850. So somebody owes me $850. That's how much is owed to me. And that is offset by revenue. So if I go down to my net income, I should see that $850 shows up as rental income. All right, and let me drill down into this. And we should have a couple transactions here. There's that $850. Yeah, so I have a negative from something else. Okay, so we're recognizing the revenue, and now we have a collections effort. And what's awesome about this is we can now go into this little portal here to show us what invoices do we have outstanding. Okay, and I just got to do all time, I think, or a custom date. Let me see if we can do... Oh, these are just too old because I made it in 2018. So my bad on that. But basically, this will show me what's overdue, what's not due yet, etc. And yeah, all right. So that's a really cool place to go for it. The other thing that invoices does, is you probably saw it as I was creating this one, is we can mark expenses billable, meaning we've incurred an expense, but somebody owes it back to us. Okay, and so when I bring up that customer, because I have these billable expenses, let me bounce one of these out to show you. I've got an expense that I incurred. I paid for something, but when I paid for it, okay, I marked it as billable, meaning somebody is going to owe that back to me, okay? So QuickBooks does a really cool job at that, right? So I paid some property taxes. Maybe this is like a triple net where this is owed back to me. Mark it as billable, Okay, we can even do markups if we want. And then on that invoice, we can add one or more transactions or amounts to it, as well as the rent we can do as well. All right, super, super helpful. Now on invoicing, I'm going to encourage you to use monthly templates as well. Okay, so that exact invoice that we created, if I go over to this 850 in my accounts receivable, that exact invoice, if this is a monthly rent, why not make this a recurring transaction, right? We can drill down into this, and right within this exact portal here, I can make recurring. Okay, and when you make recurring, you're just telling QuickBooks that, hey, every single month I want you to create this invoice so that I don't have to do it, and you can automatically send it to your tenant, and you can include billable charges. You can do all sorts of cool stuff that save you a ton of time. And so this is what I'm talking about with creating the machine, right? We know we're receiving rent from our tenants every single month, right? So why don't we say this is Juliet's monthly rent, right? And I like to schedule them to create 10 days in advance or 5 days in advance. Why not send these automatically to the tenant? In this case, I'm going to also accept payments monthly on the first day of the month, starting at, whenever. Now, what's cool about this is the invoice will have the first day of the month, but I can send it 10 days in advance. It's not necessarily due yet, but why not give the tenant an option to pay me early? And then if we do this, include unbilled charges, anything that I mark as billable will show up there as well. Okay, so the opposite of invoicing is bills and accounts payable. So just like when I create an invoice, somebody owes me something now or later, I can do the same thing with future expenses. And I love to do this because it keeps me conservative and it keeps me on top of who I owe. So whether it's a utility bill or a tax bill or a bill to a contractor, whatever the case is, I like to indicate a bill. Okay, so maybe you receive a bill that's not due for a month or so, use the bill feature. Let's say that I got this bill 9/1/2018, but it's not due until 9/30/2018. Okay? And we just indicate, just like an expense, what is it for? And so this is maybe property tax. So I'm just going to indicate that I owe $2,500 in property tax for this specific property. Okay? And so what this will do, just like the invoice, it's going to recognize the expense on this bill date, but it's not due until this date, and therefore I can kind of play around with whether I'm going to pay it early, on time, maybe late, whatever. Okay, so we're going to save and close that. And now if we go to our balance sheet, we've got that $2,500 shows up as accounts payable, just the opposite of accounts receivable, and it's recognized in my net income as property tax. Okay, right there. If I drill down into it, I should have a $2,500 there. All right. So you can see that this really helps us manage what's going on. And just like invoices had that really cool portal, bills has one as well. Let's see if this shows up a little better. Yeah, there it is. City of Buffalo. Here's an unpaid bill. You can even set up auto payment through QuickBooks if you want to pay through ACH with QuickBooks itself. Okay, so that's AR and AP. Let's go back to mortgage payments. All right, so accurately recording mortgage payments. So principal payments should not show up on your P&L. That's very, very important. We always need to have more than one line in our mortgage payments. We need principal, interest, sometimes we need escrow, sometimes we even need PMI separated out. And we're going to utilize, as I mentioned, recurring transactions and rules to build out this process. Let's see it in QuickBooks, all right? When it comes to mortgage payments, let me just get rid of some of these tabs here. I've got a mortgage in here. Let's go to my balance sheet. And I've got a balance of my mortgage that should be accurate. We want to keep the long-term liability, so in this case my conventional loan, in sync with whatever my actual loan balance is. All right, and that's going to happen in a few ways. One is we have to record the initial principal accurately at the onset. And then every time we make a payment, we want to make sure that the principal and interest is allocated accurately. All right, so what I have here is I got my bank. Whoops, I got to log back into this. Got this loan here, and it's got a balance of $123,556. Now in QuickBooks, I've got a balance of $126,628. Now that's because my balance right now is as of the start of the year. So what I'm going to do with you is I'm going to go through and accurately add all these transactions for my loan. All right, so what I did here is I made it sure that it matched my balance here. This $126,628 is the balance at the end of the year. That's exactly what I have in QuickBooks. Okay, I'm going to show you how we can make these transactions in QuickBooks, including the mortgage payment and the escrow disbursement. Now, these might show up in your bank transactions, and a lot of these will, but some of them aren't. So I'm only going back as far as July. So what I need to do here is I'm going to make some of these ones manual. I'm going to do some of these in front of you, and then I'm going to fast forward through some of them as well. But let's just create one single transaction. Let's take this exact mortgage payment, okay, and record this in QuickBooks. Okay, so who did I pay? It's going to be the bank. In this case, it's M&T Bank. Okay, from where did it come? That's my checking account. What was the payment date? In this case, it is January 2nd, and I'm going to go back in time again, 2018. And here's where we're going to indicate more than one line. So the first is our principal. Now that's going to be our exact account that we use for the long-term liability. In my case, it's conventional loans, okay? And I'm going to call this principal. The amount is indicated right there, $336. Okay, I'm going to put my class in there. JMB Investments, excellent. Now I'm not done, okay? Now I also paid interest. Okay, so that's cost of goods sold. And that is $501.24 right there. Okay. And then escrow. So I paid into an escrow account. All right, so what we're doing there is we're funding our escrow account, that we're treating that as an other current asset. We talked about that in module 2. All right, and as we pay into our escrow account, the value goes up, and then we have disbursements coming out. Okay, so our escrow payment is $1,076.11 right there, and we can go save and close on that transaction. All right, so let's see what this does then to our books. Okay, we go to our reports. Just go to my balance sheet. So I've just created that one single payment. Okay, my conventional loan has now gone to $126,292.52, exactly that. Okay, looks good. My escrow balance, okay, has gone up because I paid into it. Now, you can see here that January 24th, we had an escrow disbursement, okay? So what we need to do is do a journal entry where we're going to say that on exactly that date, 1/24/2018 in this case, we spent money on property taxes. Okay, we spent money, let's see, $3,150.07 on property taxes. Indicate the business, indicate the property, and where did we pay for it from? Our tax and insurance escrow account. Okay, not a bank account, our tax and insurance escrow account. Nice and simple. And what this is going to do is it's going to record that property tax expense on our P&L, and it's going to take out that amount of money from our escrow account so that our escrow account can be in line with what our mortgage statement is saying as well. So save and close that transaction, and notice how my escrow account goes down. Okay, let's see if this shows that. It does not. My mortgage balance is all that's showing here. There is a separate sheet that you'll be able to use for your escrow. All right. Now, I've got another payment here. Okay. Here's where I want you to start building some systems. Okay. Instead of me creating that new expense, you have a few different options to kind of not reinvent the wheel. One is to just copy the transaction. Okay. So I can take this exact mortgage payment that I've already made. We know that the amounts are going to be the same until, as you see here, my mortgage amount goes up. Okay, but I can copy this, and that's going to save me a lot of time in that I don't have to add all those lines again. All right, so I've made that copy, and I'm just going to change the payment date to 2/1. Okay, 2/1 is my new payment, and 2024 goes to 18. Okay, and now my principal and interest change a little bit. So there's my principal, $337.33. That means my interest is $499.91. My escrow account stays the same. Okay, so I can save that. Great. Now I got another one for March. Why don't I just stick right here and copy that one? Now, probably, I'm doing this retroactively. Probably you're going to be doing it in real time, which is what I'm going to show you shortly. All right, so this is for March. What happens in March? I got $338.67, and I've got an interest payment of $498.57. Save that one. All right. Now notice that March 29th, my mortgage payment goes up. Okay, that happens, right? Our escrow amounts change. So keep an eye on that. I'm going to copy this transaction, and this is going to be for March 29th. So it looks like I paid this one a little bit early. Okay, my principal and interest, the combo of the two is probably going to stay the same. In this case, it's 340.01 and then 497.23. Notice my escrow account has increased. They're requiring me to pay more. Usually taxes go up or insurance goes up. 2,095.03 is my total. Perfect match. All right, so if I save that transaction, let's go back to our balance sheet and let's see how we're tracking here. So as of March 29th, the bank is saying that I should have 125,276.51, perfect match. Okay. So the other thing we can do with this is we can make recurring transactions and or rules. Okay. So what I love to do with this is make the transaction recurring, so you don't have to go in here and copy it every time. Okay. So I can just click here, make recurring. All right, so this is a recurring expense. It's scheduled, and maybe I'll create it 5 days in advance. Now, I'd create an expense if it's auto deducted, meaning it's auto pay. Okay, I would create a bill if it's something I have to physically think about paying. Okay, so I'm going to do this as scheduled 5 days in advance. It's going to happen monthly on the first day of the month, starting on, let's just do, well, I can't do this in the future, so, but we'll do May 1, 2025 is kind of how you'd set it up. Okay, there's your business, your principal, interest, your escrow. Okay, so save that template. It's going to auto-create it. Now, you're probably thinking that, and you'd be correct to think like, well, doesn't the principal and interest change every month? Yes, but we're going to save so much time by having these transactions created that now all we have to do, or all our VA or our bookkeeper needs to do, is to drill down into each of these and just tweak them. Having them created saves us so much time. All right, so this is huge to create these recurring templates. The other option you have, okay, is you can go and make a rule in the bank feed. Okay, so I believe in May I start to see these come through. Oh, no, not until, let's see here. Weird, these are completely out of, oh no, okay, those are just late. Okay, so yeah, in May, I have this transaction come through, right? So we can also do them from the bank feed. So I can take this here, but I don't want to categorize it just as it is. I can split it. And what's cool about this is we can make a rule. Okay, so there's my paid to, what's the business? Here we're going to indicate our category is going to be conventional loan, in my case, conventional loan 1, principal. Okay, in this one, for May, it was 341.35, and then we have our interest. This is going to be 495.89, and I need one more line for my escrow account, tax and insurance escrow. And there's your 1257.79, okay? So I can apply and accept that, and I'm going to. And then, why don't you make a rule out of that? So I can go to my categorized transactions. I can go to that exact one that I did right here. Actually, I'd love to make a rule out of it. Well, I can do it on the next one, I guess. Yeah, so the next one's in June. So I would create a rule for this as well, okay? M&T monthly mortgage. Okay, money coming out, description equals mortgage. That looks to be good. Okay, there's my expense. The category is going to be something where I split it. Okay, split by actual amount. Okay, so detail 1 is going to be 342.70, and this is going to be for a conventional loan. Okay, detail 2 is going to be for interest, 494.54. Oops, this is interest. All right, and then the last one is going to be, the remainder goes to tax and insurance escrow. Now again, just like our recurring transaction, this is not going to be accurate every single time, but it's going to create it, and that's going to give me the option to then edit it. All right, so we can make this rule. Again, don't auto add. Let's just click save here. All right, and there's my, I don't know why it says business visa. Let's just check out that rule. Yeah, I'm not sure exactly why that happens. But now I can go in here and I can categorize it based on the rule, and it's going to save me some time. And then all I got to do, let's just kind of do that with these transactions. Now, let me go into my reports, go to the balance sheet. And what you're going to see, if I drill down into the balance sheet of all the loan payments, we're going to see, oh, this didn't update yet. Oh, because of 2024. My bad. Yep, so I got to make them for 2018. That's why they didn't update. So I'll go ahead and take a second and add all those, how they would have been, just how we did it. And I'll come back here and show you how we can make those edits then in the future. All right, I'll be right back. Alrighty, welcome back. So I got all the rest of these payments in here. All right, now I'm kind of mimicking what we did where we had, the June one and then we had it stay the same. So all you need to do, or your VA or your bookkeeper, these transactions are already created automatically. We saved a ton of time. Now all we got to do, and you can do this at the end of the year, you don't even need to do it monthly, drill down into these and just make the edits on the amounts. Okay, so I'm drilling down into the July one, for example. Let's just change my principal, 344.06 right over here, 493.18. Of course, the big thing here is you got to keep in mind, like, if and when the payment amount changes, because we are updating the escrow. Okay, so I've done the July one. Now let's go to the August. So here's my, let's see here. I might have done too many of these. Let's see, okay, perfect. So now I just got two more to update. I'll do August and September. I should be in decent shape here. So here's August. I'm going to go 345.42 and then 491.82. We'll save and close that. And then one more to go. All right, and again, this has been kind of a tedious look at it, but if we're doing this in real time, the transaction and the total amounts, we need to be accurate so that our bank account balance is accurate. We can tweak the principal and interest really easily, but just by going into these and editing them. You can even do it as a journal entry at the end of the year if you'd like. All right, so nice and simple, and then there's my updated balance at the end, 123,556.19, perfect match. That's exactly what you want to see. Don't worry too much if it's not exact throughout the year, but at the end of the year, when you make all these little adjustments, that should happen. Okay? So understanding your day-to-day and having processes for everything is absolutely essential for making sure you or your client, if you're the bookkeeper, is building a system within QuickBooks so that you can focus more on building the business, right? And this is exactly what we teach in Real Estate Accounting Bootcamp. So if you like kind of what we're doing here, we have a full module for way, way more in there on the day-to-day and everything that I do within my business to kind of systematize it so that I can get back to investing and get back to making YouTube videos and all the other stuff that I do instead of kind of being buried in the books. I really appreciate your comments. If you want to ask any questions, feel free to do that here. Look out for the rest of the series. We've got modules 5 and 6 coming up, and definitely check out Real Estate Accounting Bootcamp. I'll see you in the next video.